PantheonAI presents Oracle's $30 billion cloud deal, Platinum's 28% spike, and Fed bank test winners. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, and today is June 30th, 2025. Hope you're all ready for what promises to be a really engaging and insightful look at the markets.
Absolutely, John. As we navigate the twists and turns of another busy trading day, we're going to break down the numbers, unpack some fascinating stories, and really explore the trends shaping the financial landscape. And hey, we'll try to keep things light with a few chuckles along the way, right?
That's the plan, Sarah. Let's kick things off with a quick market overview. This morning, we're seeing some very mild declines across the major indexes. The S&P 500 is currently trading at roughly 6,187.54, down just a hair, about 0.1%. And the Dow Jones Industrial Average, sitting at around 43,973.54, also dipping by approximately 0.1%.
Right, so pretty minimal movement there. The Nasdaq's trailing slightly behind at about 20,324.39, declining near 0.2%. And the Russell 2000 holding steady in that 2,175 range, down just a fraction, about 0.1%. So tiny shifts, but still shifts.
Indeed. Now, shifting gears to crypto, which is always interesting. Bitcoin's trading at nearly 107,748.39, with a decline of roughly 0.6%. And Ethereum, not too far behind, is at around 2,477.88, down about 0.9%.
You know, while those percentage changes might seem minimal, they really do remind us that even the giants of the market can have their off moments. It feels like a day filled with cautious trading, reflective of those broader global uncertainties we've been talking about.
That's a great point, Sarah. After that brief look at the numbers, let's dive a little deeper into some major market trends that really have investors and traders buzzing. Over the past few months, we've seen this fascinating interplay between traditional equities and these emerging technology sectors, haven't we?
Oh, absolutely. There's been a really notable increase in demand for stocks driven by advancements in cloud computing and artificial intelligence. I mean, market sentiment is just so fluid right now. It almost feels like every single day brings a new headline, either promising a technological breakthrough or, an unexpected twist in global economic policy.
It really does. And on that tech note, let's talk about Oracle. Over the past year, Oracle's stock has been something of a shining star, fueled by a robust move in cloud growth and, of course, the rise in artificial intelligence. I saw a recent filing that revealed a massive $30 billion annual cloud deal. That's huge.
$30 billion? Wow. And this isn't just a one-off event, is it? Oracle shares have surged over 33% this year. That kind of momentum, John, is not something you see every day. And it really underscores the influence of strategic partnerships and technology adoption in transforming a company's entire outlook.
Exactly. And there's more to the Oracle story. Several reports, all emphasizing Oracle's climbing stock, highlight a common thread. The enthusiasm around new cloud agreements is just intensifying investor optimism. I even saw one analyst from Stifel went so far as to point out that Oracle's future revenue opportunities could be exceptionally promising thanks to its latest cloud agreement.
It's like watching a well-choreographed dance, isn't it? Where every step is meticulously planned to capture the investor's imagination. And trust me, when you see a dance like that, you start wondering, can my retirement portfolio learn a few moves? Mine certainly needs to.
Mine too, Sarah, mine too. But moving on from tech, there's Platinum, which has had its own moment in the spotlight. We've all been tracking the performance of the metals sector, and Platinum's recent surge by 28% in June has certainly caught our eye.
It's a remarkable spike, and it's driven largely by a global supply shortage that's been ongoing since 2023. It's a classic case of supply and demand at work, really. While stocks in other sectors have been holding relatively steady or showing modest gains, this meteoric rise in platinum prices has ignited debates about where the market might be headed next in the metals and commodity space.
Definitely. And let's not overlook some significant news coming out from the bank sector. In the wake of the Federal Reserve's latest stress tests, two of the biggest bank stocks, Goldman Sachs and Wells Fargo, have emerged as clear winners. These financial heavyweights have not only withstood rigorous scrutiny, but have also positioned themselves as beacons of stability in an uncertain economic climate.
It's almost as if in the midst of market volatility, these stalwarts are saying, we've got you covered. And honestly, in a world where economic headlines can sometimes read like a thriller novel, it's pretty comforting to know that some institutions still have their act together.
It really is. So, with those initial thoughts in mind, let's stitch these pieces together with a comprehensive look at some important stories making the rounds today. Our first story is all about Oracle and its monumental cloud deal. Reports say that Oracle's latest filing revealed an annual cloud agreement valued at $30 billion. This development, as we mentioned, has been the catalyst behind Oracle shares rising more than 33% this year.
And it makes sense, right? The cloud services market is transforming rapidly, and Oracle's ability to secure such a significant deal really highlights its strong position in the industry. Investors are clearly optimistic about how this deal can further propel Oracle's earnings, making it a key player to watch for the rest of the year. Closely related to this is our second Oracle story, which focuses on asterisks why Oracle's stock is on an upward spiral.
Right. The announcement of that new cloud agreement, paired with an analysis from a prominent Stifel analyst, has really created a buzz about the revenue opportunities ahead. The analyst pointed out that while the cloud sector is fiercely competitive, Oracle's robust infrastructure and strategic investments in artificial intelligence are giving it a competitive edge. It's almost like watching a seasoned marathon runner who just picked up extra speed in the final lap, isn't it?
It really is. A reminder that sometimes it pays to stick with a solid strategy. And our third and fourth stories continue along the same vein. Again, we're hearing about Oracle's cloud deal and its impressive stock performance. The consensus is clear. Oracle's growth trajectory, buoyed by strategic cloud and AI initiatives, stands as a testament to how traditional tech companies are rapidly evolving.
Yeah, the repeated emphasis on Oracle in these pieces really echoes the market's strong sentiment about the company's future. It's as though everyone at the water cooler is talking about Oracle's massive win, and you can't help but wonder if this could be the moment that defines the next era in enterprise technology.
That's a fascinating thought. Moving on to our platinum story, this is our fifth, sixth, and seventh important narrative of the day. Here, the spotlight is on Platinum's stunning surge of 28% in June. Reports indicate that a global shortage of platinum since 2023 has played a key role in this dramatic price jump. Investors who have been keeping a close eye on commodities are now abuzz with speculation.
And it makes you think, doesn't it? With U.S. stocks hitting record heights and this precious metal making such an impressive leap, one starts to ponder the future dynamics between tech-driven equities and commodity-based assets. It's a balancing act that reminds me of trying to decide whether to order pizza or sushi for dinner. Both are appealing, but sometimes you have to go with your gut, or in this case, your portfolio's appetite.
That's a perfect analogy, John. Our final news piece today is centered on the banking sector, focusing on Goldman Sachs and Wells Fargo. Under the intense spotlight of the Federal Reserve's latest stress tests, these two banking giants have emerged as the biggest winners. The test results not only underscore their operational resilience, but also suggest a possible trend towards a more conservative, risk-managed future for the banking industry.
And when you see a couple of major players rising to the challenge while others stumble, it really sets the stage for a potential reordering of priorities in the financial world. And let's be honest, when big banks start doing well, it's like your favorite local diner finally fixing that leaky faucet. You might not notice it at first, but once it's done, everything flows much smoother.
Such a good point. With these stories in mind, let's shift our conversation to a detailed sector analysis, beginning with technology. The tech sector continues to be a powerhouse of growth, driven largely by innovations in cloud computing and artificial intelligence. Oracle, as we've discussed, is truly leading the charge here, and its recent agreements have positioned it as one of the top contenders in this space.
But it's not just Oracle, is it? The entire industry is witnessing a wave of strategic partnerships and major investments aimed at integrating AI into every facet of the business. This trend is so emblematic of the times, and it raises an interesting question. Could the next big tech boom be driven more by behind-the-scenes infrastructure deals rather than consumer-facing gadgets? It certainly seems plausible.
It does. Now, turning our attention to the energy sector, while there isn't a headline story directly tied to energy today, the indirect effects of global supply chains and commodity price fluctuations are very much in play. For instance, the impressive performance of platinum has implications beyond just the metals market.
Right, because platinum plays such a critical role in various high technology and industrial applications, its price movement can signal shifts in broader manufacturing and energy costs. Investors might do well to consider how these changes could ripple through energy and manufacturing sectors, especially in a landscape marked by both environmental initiatives and rapid technological changes.
Absolutely. Now let's delve into finance. The news around Goldman Sachs and Wells Fargo is a strong indicator that, despite the occasional stormy market weather, some of our most storied institutions are not only surviving, but thriving. The Federal Reserve's stress tests have provided a form of market validation for these banks, and their ability to emerge as clear winners highlights a trend towards increased stability.
It's a bit like watching a heavyweight boxer step into the ring and come out on top. The resilience they've shown is a promising sign for investors seeking safety in turbulent times. And, of course, the performance of these financial titans has its own set of implications for the broader market, potentially heralding a shift towards more conservative portfolio strategies as we look ahead.
That's a very insightful parallel. As we consider global market implications, it's really important to recognize that the trends we're seeing domestically are deeply intertwined with the dynamics of international trade and economic policy. The massive cloud deals, the surge in precious metals like platinum, and the resilience of U.S. banks are not happening in a vacuum.
Definitely not. Global investors are keeping a watchful eye on these developments, and the interplay between supply chain challenges, geopolitical tensions, and central bank policies worldwide could really set the stage for exciting and sometimes turbulent market movements in the months to come. I mean, imagine a scenario where shifts in monetary policy in one region could abruptly change the risk appetite across the board. It begs the question, are we entering an era where local news truly becomes global news, with every headline resonating on an international scale?
That's a profound thought, John. Adding another layer to this conversation, let's talk about expert insights and predictions. Many of our leading market analysts are weighing in on what these developments could mean for investors. For example, the continuous momentum in the tech sector, especially with companies like Oracle spearheading innovation through cloud and AI investments, suggests that technology could very well be the bedrock upon which future economic growth is built.
And meanwhile, commodity experts are urging investors to keep a close watch on metals like platinum, especially given the supply disruptions that have been affecting the market since 2023. And then there's the banking sector. While some might worry about loan defaults or interest rate hikes, the stress test results provide a reassuring signal that some financial institutions are better prepared than others.
So, what does this all mean for you as an investor or trader? It might be wise to ask yourself, how diversified is your portfolio? Are you positioned to take advantage of these sector-specific trends while maintaining a balanced risk profile? Those are key questions.
Absolutely. And on a lighter note, I have to say that sometimes the market feels a bit like a roller coaster. One minute, you're enjoying the exhilarating highs of a massive stock rally, and the next, you're gripping the safety bar in anticipation of a sudden drop. But in both cases, there's a thrill to the ride.
There really is. And as always, if your stomach can handle those twists and turns, so can your portfolio, provided you have a sound strategy and a clear head. After all, if learning shouldn't feel like a full-time job, wouldn't you agree that taking a few moments each day to understand where your money is headed makes the ride all the more worthwhile?
Couldn't agree more. So to summarize today's discussions with a few key takeaways. First, while the major indexes are only experiencing slight dips, the broader market trends signal pivotal shifts, particularly in technology and finance. Oracle's instance in the tech sector, thanks to its multi-layered cloud deals, is a strong reminder that innovation can drive significant stock performance.
Second, the remarkable surge in platinum prices illustrates that commodity markets remain a vibrant space, with their own unique opportunities and challenges. And finally, the strong performance of Goldman Sachs and Wells Fargo amid recent stress tests underscores that stability can still be found in the financial sector, even when broader market conditions are relatively uncertain.
These stories and insights aren't just about numbers on a screen. They're about the evolving narrative of our global economy. As investors, we're all in this together. Each headline, each price movement, and each expert prediction is a chapter in the larger story of economic resilience and opportunistic growth. So I invite you to reflect on today's analysis. How might these trends influence your investment decisions? Is it time to re-examine your portfolio's allocation in light of these sector-specific shifts? And which story resonates most with your strategy for growth in the months ahead?
Before we wrap up our briefing today, I want to take a moment to thank you for joining us on this deep dive into the markets. Your attention and curiosity keep these conversations vibrant and meaningful. Remember, Pantheon AI is here as your trusted information co-pilot, guiding you through the complexities of the financial world with clarity and insight. We encourage you to share your thoughts, ask questions, and join in this dialogue as we collectively navigate the exciting landscape of global finance.
Looking ahead, tomorrow promises another engaging session where we will continue our discussions on market trends, sector analyses, and the latest investment opportunities. So please be sure to come back for the next episode and keep those thoughtful questions coming to our AI Copilot. And remember, learning shouldn't feel like a full-time job.
Exactly. Thanks for tuning in this morning, everyone. And until next time, keep your eyes on the big picture and your portfolio diversified. Have a great day ahead. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.